Welcome back. In our business news, non-oil UAE trade hit 297.3 billion dirhams for the first 4 months of the year, up from 237.5 billion in Q1 the previous year, recording a 25% growth. Statistics from the Federal Customs Authority reveal that growth in imports rose by over 21%, from 155.9 billion dirhams in Q1 2010 to 189.6 billion for the same quarter this year. Exports, however, achieved 23.7% growth, while re-exports gained nearly 26%. Off the back of the findings, the FCA stated that this growth confirms the national economy's course of recovery and productivity. The UAE Central Bank's deposits and securities investments has hit record highs as it maintains diversity in the distribution of its assets. Data from the central bank shows that the total assets abroad rose by nearly 45 billion dirhams in the first half of the year in deposits and securities, while loans and advances rose slightly and other assets remained unchanged. Held to maturity investments jumped to their highest levels to 192.7 billion at the end of June. Deposits with banks abroad also rose to record highs from 44.5 billion dirhams to 73.6 billion, while securities increased by 10% at the end of June. Ratings agency Fitch has confirmed Emirates NBD's default rating as A+ and viability rating at BBB, removing the bank's rating viability from rating watch negative. The agency has removed the negative watch as it believes that the bank has sufficient operating revenues to absorb any need for further loan impairment charges, according to a statement, as well as support from UAE authorities. According to a local paper, analysts say that the improved rating means that the lender will accelerate its plans to raise liquidity through a medium-term notes program. Emirates NBD's net income was up 43% in the first half of the year. Let's now take a look at the stock indices across the GCC. And internationally, World Bank President Robert Zoellick says it's too early for joint G20 action on the sovereign debt crisis in Europe and the US, adding it's up to individual governments to bring down their long-term debt. The European Central Bank has been forced to step in to buy Italian and Spanish bonds, while Germany and France are scheduled to meet later on Tuesday to discuss measures to ease the crisis. Speaking in Canberra, Zoellick says it's time to push a free trade agenda. He noted that the appreciation of China's currency would be a positive step towards restoring global economic stability, while also helping tackle China's inflation.
The circumstances have changed a little bit. And so as China started to worry about its inflation rate, I think that led to some balancing of the consensus in China to move towards appreciation of the currency. That can help deal with some of the inflation rate. It's also a contributor, I think, to some of the stability in the international system.
Meanwhile, the World Bank's chief economist for Latin America stood by the 2011 forecast of between 4.5% and 5% economic growth, despite turmoil in European and US financial markets. He said the region, which depends heavily on commodities exports, could be hurt if China's economy suffered a sharp slowdown, but that the future of China is yet to be defined. On the first day of a 3-day bus tour through the Midwest, US President Barack Obama says he will put forward a plan to boost the economy in September. The White House says Obama is on a listening tour to hear from Americans about the economy and talk about how to boost jobs and hiring. Obama said he would put forward a plan for economic growth when Congress returns from summer recess and challenged lawmakers to take action. Obama touted his job growth agenda, which includes extending a payroll tax cut, finalising free trade pacts and promoting infrastructure projects to create construction jobs.
Moving forward, my basic attitude is we know what to do. I'll be putting forward, when they come back in September, a very specific plan to boost the economy, to create jobs, and to control our deficit. And my attitude is get it done. And if they don't get it done, then we'll be running against a Congress that's not doing anything for the American people, and the choice will be very stark and will be very clear.
And finally, search giant Google hopes it found a new weapon in its battle with rivals Apple and Microsoft. In a $12.5 billion deal, it's paying a 63% premium to buy Motorola Mobility, giving it an intellectual property library in wireless telephony and putting its Android operating system on much firmer footing. The $12.5 billion cash deal could, however, make other handset makers who license Android feel disenfranchised. Google has stressed that Android will remain open to all and that it plans to run Motorola Mobility as a separate business.
You could argue, I think, that the intellectual property that they're acquiring might be used to the benefit of the broader Android licensee community. So this intellectual property may be used to the benefit of the likes of Samsung, LG, HTC, and some of these other phone manufacturers out there who may be feeling a bit vulnerable given the the intellectual property claims and lawsuits that are flying around in the industry right now.
Before we go, here's a quick look at the overview of oil, precious metals and currency markets. And after that, we have the day's sports news for you, so stay with us.